So, Joyce, what are your expectations when we're talking PCE, that report again coming out at 8:30 a.m. Eastern? Do you believe we're going to hit the estimates, be cooler, hotter? What are you expecting?
I mean, we see inflation remaining pretty sticky here in the first half of the year. So it's not just this month's reading, but we're looking at core CPI at around 3% here. So I think that you have the potential for more upside, surprises here. And with all of the talk on the tariffs, I don't think that the concerns on inflation being higher are going to go away.
Okay, so those concerns don't go away. Let's talk about tariffs. We saw a couple economic reports just like a couple weeks or months ago where manufacturers, they were starting to kind of work tariffs into their pricing. How do you see tariffs impacting inflation going forward, specifically these potential tariffs on Canada and Mexico the president was talking about, the potential for even more tariffs coming on China? How do you see that in not only impacting inflation, but also the dollar if we continue to put tariffs on these different countries?
Yeah, well, Frank, I don't think the full impact of the tariffs is priced in yet. The market is still trying to figure out how much of this is a negotiating tactic versus a reality. And the timing for the tariffs, you still have to go through, even if you announce them, a review, a notification, a comment process. So I don't think this is fully priced right now. But when we take a look at the 10% tariff that is proposed on China, 25% tariffs on Canada and Mexico, we think we could be looking at price effects that are anywhere from 0.3 to over a percentage point on the PCE price level. So I don't think that's fully priced right now. And turning to the dollar, we think that tariff rates of like 7 to 8% are priced right now. We've seen dollar appreciation, but we're not pricing in the possibility of higher tariffs in the inflation numbers yet. I think GDP growth is also impacted by this. A 25% tariff on Canada and Mexico could be as much as 0.7, even 1% of GDP off of the U.S. There are doubts on whether this can actually be implemented, though, because it's really hard to replace some of these supply chains that we have with Mexico and Canada.
All right. I also want to talk to you about tariffs and Fed decisions. Is the Fed, in your mind, are they pricing in the idea of these tariffs coming in? And also, do you see a potential presidential impact on the Fed? Of course, the president back in Davos, he basically demanded for lower rates, kind of what a lot of people call jawboning Jay Powell and the Fed to make a decision. How are you seeing those two things when it comes to the Fed decision making for the rest of this year?
I think the Fed, gave a very clear message. The Fed policy was unchanged at the 4.25% to 4.5% target rate. It was a unanimous decision. Powell said repeatedly that the FOMC is in no hurry, and he's also made it very clear that if inflation remains firm, rather than the gradual easing that had been expected previously, they would keep the policy on hold at current levels for longer. So I think that the Fed is likely to remain on hold for the upcoming meetings, and they also made it very clear that the 2% inflation target would not be debated during the framework review. So I think the messaging from the Fed has been very clear despite the jawboning.
All right. I want to ask you about something else. I don't know how much research you've done on this, but I would like to get whatever thoughts you have on it. DeepSeek rattled the markets earlier this week. It's really changed a lot of perspective when it comes to the AI trade and the need for AI infrastructure compared to software. How are you viewing DeepSeek, its impact not only on the markets, but potentially on the economy? Does this have the potential to influence, hiring and other things like that?
No, I think it has opened a debate. When we first started talking about AI, we talked about it being open source and CapEx light. That then transformed into a debate, well, how CapEx heavy is this going to be, given all of the costs that are involved in data centers? So we're getting back to now just taking a look at the model and the cost efficiency that DeepSeek's training, seems to imply. But I think there's still a lot of questions here about the training costs, also about the specifics on the training data set and the methodologies that are employed. So I think it's still early stages here. I don't see this having a big economic impact. It is a debate that's going to be ongoing. But what we see with every new technology innovation cycle, we continue to see these innovations. I still think we're early stages in the investment cycle here.
All right, so early stages overall when it comes to your view on how it might impact the economy and the investment cycle. I want to talk about one particular part of the market, the chips, a cyclical sector. How do you see it impacting that?
No, I think that chips, there are many other factors, not just DeepSeek, that will be in discussion when we look at U.S. industrial policy and what could play out, whether it is tariffs, export restrictions, and even legislation. So I wouldn't just look at this one isolated incident. I think there's going to be much more emphasis on the U.S. on industrial policy. It had been on the, on chips, even the potential that could we see like a CHIPS 2.0 act at some point in the future.